Hello YouTube, it's Steve here, making a video for the end of the week, a little bit before the market close here. I've been kind of lazy this week as far as keeping up on this project goes, but thankfully with swing trading, don't really need to make adjustments all that often. And we are still sitting at around a $22,000 gain since making the adjustment. So we've been mostly just kind of sitting around that range for the last entire week. At one point, I forget which instrument it was, but on the overnight we were down to like plus 16k, but we're back up to the 22 level. So let us take a look at how we are ending 2021. So, just going to go down the line here. So for gold, we are still long. Still got long signals across the board. Trend is upward. Not really quite concerned about any resistance levels just yet, since we're still a little bit below these peaks right here. We've got a little bit of room to move by about $10 an ounce. And then beyond that, you can pretty clearly see where the other major levels are going to be above there. So for the time being, we're not going to make any changes. It's just not necessary. For the Russell, also long here. I've mentioned before, I do not trade the Russell. It's just not something that I've just ever had any real success with. And one of my personal policies when you're putting real money on the line is that if you're not sure about something, you just don't do it. Because missing out on potential gains is not the same as taking a loss. So just, don't worry about it. So we are going to stay long here, even though we're kind of hitting resistance level there. So we'll see how that goes. A lot of the time the Russell will rally at the end of the year. I mean, we're seeing that right now. On to copper. And we're just still kind of breaking out of this base here. We'll see if the price of copper can hit the other more recent highs. For the most part, again, it's the end of the year. I also don't trade copper that often. I've traded a handful of times, but for the most part, whenever I'm swing trading, I'm doing it with silver. On to crude, and we are on a red day today, but we've still got some room here. Recovered quite handily from that major decline that started happening during November. We'll see if we can hold this support level, see how that goes. I haven't checked up on the EIA news this week or OPEC or anything like that, because I've been just kind of taking the time off to relax for the end of the year. So on to natural gas. This one, again, been harping on the fact that we've been kind of like in this little base level here. Strictly speaking, probably should have gone short a couple of days ago, but again, I wasn't really paying a whole lot of attention to this project this week, so we'll see how that goes. But we've rallied today pretty handily, up 5.67% for the day, so we'll see if that momentum can keep up. I think that if something's happened similar to last year, where we had all the ice storms down in Texas, then there's a good chance that we could have another rally. Plus, again, I haven't checked up on the EIAs. Don't know what's going on with Russia. Haven't been paying attention. I've been doing other stuff this week. Spending time with family, and also got briefly ill, because that's a recurring problem with me, is that I get sick a lot. On to bonds here, the T-bond futures, CB. So, as I mentioned before, I am not bullish on treasuries at all. The Fed isn't doing what I would consider to be my first choice as far as policy goes. I'm not an economist, though. I'm not trained at one of those big fancy business schools. So this is just my opinions from reading various different sources about what happens when you keep your interest rates down for too long and are spending a huge deficit. I don't think it's good, to say the least. So for now, we're going to stay short. Moving off our signals here, we are bearish across the board. Might hit some support here. As you see, we bounced, but we've got an inverted hammer, and so we'll just have to see how that goes. But I don't trade treasuries that often. again, also with this one with the 10-year, which weirdly enough I would have thought that the 10-year would have done better for me, but for the most part, for most of this experiment with the 10-year T-notes, I've been in the red as far as that goes, and even now we're still only up 234 and 38 cents. Um, but we're pretty range bound right now. These are still some pretty wide moves. So like if you're day trading, the guys that I know that day trade the treasuries usually do the 10-year. Um, so still some money to be made. Um, Moving on to silver, same as gold. I really like how silver moves on the daily charts. It's pretty easy to work with for the most part. Um, you really don't have to pay nearly as much attention to certain supply and demand stuff, support and resistance, as with gold. Um, Gold is a lot more. In my experience when looking at a gold chart, um, silver's a lot more fluid here in terms of gold, which honestly looks a lot more like a forex pair or something like that. But I don't trade currencies either. I traded Bitcoin once back when I was in college for my first degree, like 5 years ago, and I made some money when I was in physics class. Professor didn't like that, but I was just like, well, I'm okay with you being upset. I just made $400 in half an hour, and I wasn't trading actual Bitcoin. I was trading the Bitcoin Trust ETF. I think it's GBTC, something like that. That was back before I switched to futures or even options. I didn't even do options back in the day at that point because I was still pretty new. I'd only been doing it for like around a year and a half, mostly swing trading large caps. I traded a lot of AT&T, IBM, things like that. Basically, just sticking close to the big names that everybody recognizes. Never really been much for small caps. So, and moving on to ES. So again, we had a pretty good rally here, and we got like half of that from when I switched the strategy here. So not looking too bad there. Being up $5 grand for a swing position like that, it's not bad, especially since we're only doing one contract at a time. It's just shy of 100 points. And yeah, no, there's nothing really here to change. If this were live money, I would probably have been scaling in and out throughout this whole move here. As I've mentioned before, I trade ES on the 8-hour as far as swing trading goes. So I probably would have been scaling in, and then as soon as we hit this plateau, scaling out. We're a little ways off of where it peaked by like 20 points, which is still some pretty good money. You know, I always tell people any gain is a good gain. Like if I scalp and then I decide that I don't like the market and I came out with like 2-3 points, something like that. Well, that's still 2-3 points in my pocket, as opposed to hoping that it gets better, and then ending up losing money. Trading on hope is, in general, a bad idea. I cannot say I recommend it. You really want to pay attention to statistical probability and trying to make sure that you have the best odds possible for going into your trades. The way that I do that is I have my indicators and they work pretty well for me, but you really want to pay a lot of attention to price action volume. I like to use volume profile on the intraday stuff. Pivot points are pretty good. I like to set them to working with the fibs. On the 5-minute chart here, we've had a pretty choppy day. This is not something that I would consider conditions that I would personally enjoy trading. There are like some big swings here and there, but it's like really, really, really choppy. That's why you got to pay attention to the volume profile, because you can see like the point of control's down here, but like this is a pretty big thick area here. Like going on about volume control. A lot of the sources that I've read on the topic will talk about things like looking at previous daily moves. If oh, there we go. Okay, it doesn't always load right away. Where we've got a pretty narrow one here for a lot of the day, really choppy open, as sometimes happens. staying right in a really narrow range. But then as soon as you move out of that range and you have a breakdown, like that's a pretty big, nice, strong move. And we've kind of gravitated to that. Forget exactly what the phrase is. It's like a point of control, but like high value node, I think they call it. I'm not really big on the terminology. I just know what stuff looks like and how to work with it. But you can see that the that high value node down here from where it hit the bottom and then bounced and then was kind of sideways before losing that again. If you were on the overnight and trading this, these are some pretty nice big moves here actually. I could see myself trading this pretty well. As opposed to the end of the day here, and it might be a combination of it's the holidays, the Santa rally, end of year, people preparing for the weekend, all happening all at once. This is the kind of conditions where I would really be looking to scalp a lot of things. When I trade intraday anyway, when it comes to ES. One of the features that I wish Tradingview had that they don't have yet is that I wish that they did a volume tick chart. And what's nice about that is that it's just a regular candlestick chart, but it only updates after a certain amount of ticks have happened, as opposed to a time frame. So, like, if nothing's happening, then the chart's not really going to move around a whole lot. So for example, like in the very beginning of the day, starting around like 7:30 up through about 10:30 to 11, the tick chart will be moving much more than from 11 up through lunchtime to like 2:30 to 3. A lot of day traders will focus on like the first hour of the day or the last hour of the day or both, depending on what their strategy is, what they're comfortable with. I personally like to start in the pre-market. Usually I'm up around 5 to 6 Eastern Standard Time. I'd be able to catch some of these pretty big moves pretty easily. And it's a lot more realistic to have expectations of your indicators being something you could trade off of rather than price action if you do use the volume tick chart. Simply because it's a lot less choppy in how it looks, and I'll probably do a video doing that on my actual broker at some point to kind of show how I would set that up. On that one, I don't even really bother using indicators a whole lot. I do the volume ticks at on the S&P I have it set to 2,000. On NASDAQ, on the very few occasions that I do that, I have it set to 5,000, which sounds like a lot, and it is, but it helps cut out a lot of the noise. Like I'll just throw on the NASDAQ and show an example of that real quick. So like if you're trying to trade off of indicators, right? And this is an absolute nightmare to look at as far as indicators go. Like you might get lucky and have something like this where it closes at 16,393 on your MACD cross there. And then you've only lost 1 point by the time that it has another cross up. It's just really choppy. Indicators will have you losing a lot of money, not only in just bad trades, but also in commission fees, because you're going to be overtrading a whole lot. Whereas the tick chart for NQ is just much smoother when you have it set up right. And I might actually change it from 5,000 to even 6,000 or 7,000. Oh, it looks like we have a sell-off today. All right. All right, I'm off screen looking at my actual broker right now, and oh, the hell with it. We'll see how that goes.
Order filled.
All right. So you can't actually see it right now on this screen, but on my ES tick chart, it just broke down through my my center VWAP and is currently hitting the first standard deviation.
Order filled.
And exit. Okay. So let's see, what the hell did I get? I got a 1.25 there. All right, fantastic. Yeah, no, I just saw the sudden uptick in value here or volume, and was just like, I want to make a couple of bucks off that. So there goes my $60 for the afternoon, because I'm not really usually an afternoon guy, especially on Fridays. So for the most part, I was usually spending that time either just relaxing or doing homework, stuff like that. Starting next week, I'm going to be focused a lot more on my data science stuff. And man, I should have kept that short position in. That is fantastic. We just closed below the first standard deviation support level, and it's still falling. My cover price was 47.64 and 25 cents, so I'm missing out on like 3 points here. So like I was saying before, um, missing out on gains is not the same as losing money. And anytime that you come out of a week with a trade account that is valued more than when you went into the week, that's a good week. Because most traders lose money, and I'm no different from them as far as having my own psychological problems that I have to keep track of. Fear, greed, impatience, and all that. I'm in a handful of groups on Facebook with a lot of new traders, and I give a lot of advice that you're going to hear in like just about any trading guide out there. Like, have a plan, stick to it, be disciplined, use risk management. Um, really get a feel for the specific instruments that you're trading off of, because they all trade differently. All 100 of the companies, as far as I'm aware, that are in the Nasdaq 100 are also in the S&P 500. All of the Dow Jones 30 are all in the S&P. So they're going to have like some amount of correlation, but at the same time they're still a little bit different. Um, the Dow is one that I like for scalping, not so much for swing trading, because it's kind of choppy compared to the S&P. The S&P I actually am a lot more comfortable with than the Nasdaq, even though the Nasdaq is going to be in general more profitable. And all right, yeah, I'm just looking at my other brokerage again. We are. It looks like we are rebounding just above the first standard deviation of the VWAP. The way that I have it set up is I have the VWAP and then 3 standard deviations on each side for support and resistance levels, and that's how I like to plot reversals in combination with price action. So, but I don't have it set up like that on here. I have a very minimalist setup as far as the my swing trading goes, because, well, I focus on other things other than trying to get in and out and make quick moves. It's more about positioning for me. But yeah, no, this is quite a nice sell-off. But again, if you look at the indicators here, and you were trading off of the MACD, you would have basically lost literally every single trade today. You would have lost money. It would not have been a fun time for you. I don't know. Let's see, 402 until 408. Okay, you would have made 6 points here before getting chopped in and out of the open. So that's not a fun time. One thing that I used to do when I would trade the Nasdaq a lot is I would switch to the 3 minute, and it's still pretty choppy, especially today. But on the big broad swings, um, you can get in and out a lot faster, and the Nasdaq just kind of moves a lot faster like that than the S&P, as you can clearly see. The 1 minute, if you're not scalping, I wouldn't use it. That's just my preference. Uh, but again, day trading, volume tick chart, that is my tool of choice there. Because if we're on the generally, I trade better on the higher time frames. Um, but as you can see, being told to go short here, like, you would have immediately just, whatever your long position was here, you would have taken a huge loss. Um, and then it's already started rebounding by just a little bit, so you'd be at another loss. So, yeah, no, I'm not an expert in day trading by any means. I don't believe I had any losing trades this week, though. I gotta check Tradingview with that. Um, let's see, this week, what did I do? No, I made a total of 3 trades, and they were all winners. Um, a total of just over 15 points for the week in total. So, yeah, no, that's not bad. And again, I like Tradingview. They're pretty fast. Their in-house charting software leaves a lot to be desired, especially when you're used to working with like something like Tradingview or NinjaTrader or one of the other big name brokers that has a ton of stuff built in. Like they'll have your standard indicators and stuff if that's what you're looking for. Volume profiles built in. It's just always there on the screen. As far as I can tell, you can't even take it off if you don't want to, but it blends nicely into the background, so it's not like intrusive or anything. Um, you got your various types of moving averages and oscillators, and you got your delta volume, your CCI, all that stuff. But once you've really been trading for a while, you kind of get a feel for what works, what doesn't work. I know some guys really like the RSI. I don't touch it. I've thought about incorporating it into strategies before, like only go long if the RSI uh, is coming out of an oversold area, and also this other indicator is your leading one there. Although indicators in general are not leading indicators, I just mean that's like the one that you're looking for signals on. Just to clarify there. Well, I have rambled enough. I tend to do that when I have things to say. I repeat myself a lot again. I'm still new at this whole thing. I'm not a professional in a instructor or anything like that. I don't sell signals or chat rooms. Even my inputs for my indicators that I use, like they're all stuff that I've custom worked on, like custom inputs, custom time frames, everything. Um, if you have an engineering background, you're probably used to tinkering with things, and that's kind of how the approach kind of developed for me. Was that I was just like, I understand how this works. Is there a way that I can make it work better? As opposed to with the my one based off of stochastics here, which works in almost entirely the opposite way that it was originally designed for by the creators like 70 something years ago. No, I'm probably wrong on that time frame, but it has been around for quite a while. So I will see you guys next time, and happy hunting, stay solvent.